Avoid the chop. Right now we have tariffs in focus, Nvidia earnings up next later on in the week. That could provide some big time volatility here, but until then, avoid the chop. Here are the key levels that we're going to talk about here coming up today, the things to watch out for, and also what to avoid. Join me today in this pre-market video here for February 23rd, 2026. Let's go ahead and get started here with some of the analysis here. Looking at the charts right now, this is the ES. And again, welcome right now to the live stream here. What we're looking at the moment again is, let's see here. Let's get this thing on right there. What we're looking at the moment is compression from all angles here. Basically, you have this wider range in the ES. You have this compression toward the center of the range. Anytime you have that compression toward the center, between those two extremes, it's all chop. This is danger right now. You want to avoid the chop at the moment. That means this is a rotational market. A rotational market right now where you want to fade the edges, you want to fade new highs, fade new lows, traps above the previous session's highs, traps below the previous session's lows, or at the weekly extremes until proven otherwise. Again, this is a market that's kind of trying to digest recent tariff news and what's to come. So there's some indecision there. When there's indecision, there's a lot of chop. Got to be mindful of that right now. 1, 2, 3, 4-day compression here. That's a 4-day compression. And at the moment, what that's showing is the potential here to build energy and get to at least one of the extremes. Get to one of the extremes right now. Can it get to one of the extremes here? Sooner than later, we will see. But for the most part, that buildup of energy will fuel the next move either back to 7,000 or down towards 6750, somewhere in that zone. But you got to avoid the chop until then. The NQ, looking at the daily time frame here, look at this 4-day compression right now. Inside day heading into the RTH open. This one with Nvidia earnings again later on in the week. That could provide some big time volatility here up ahead. If this were to break through the 25,250 zone here, that opens up some upside. Again, this market has had the ability to trade within this wider extreme here. This wider extreme takes us from 26,500 down to 24,250. And after forming that recent low, this compression could be a coiling event for a return back toward highs. Again, pending Nvidia earnings. If this thing can break through the 25,200 level, there's some upside. We can quantify this using our PivotBoss Advanced ADR tool. That's a 4-day range right there. And what you're seeing right here, that 4-day compression, that's right there. And it's about 44% of average range right now. You can see if we come down here, that's in the bottom 14 percentile of the yearly data set. Anytime you're compressed, like you see here, there's a tendency to see that pop, this pop of energy right there. So this is the spot here where you're building that energy. The release of energy could easily get us to about 1,100 points of range up ahead when this thing's ready, 1,200 points of range. The average would be about 900. So very soon we're about to get a big time release of energy later in the week, but you have to be mindful of the early chop before that happens. All right, let's take a look here at crude oil. And again, I welcome anyone to chat as well. Put in any futures contracts that you'd really like me to take a look at here, or any tickers here. We're going to continue to kind of massage this live stream and get this thing going in a way that it can be very beneficial for the pre-market open. One thing we've talked about before with regards to crude oil here, that 62 level right there, that 62 level, big time support. It held, and that was the last line of defense. And what we mentioned before, if it can hold here, we retest 66, with a shot to break through and get our 69 target. We have 69 up here. That's been our target for a little while now. The initial target zone was 65 to 66. That's what we were looking for to begin the quarter. But once we got this key range, this impulse move right here, we updated the target to 69 by the end of the quarter. So we're working there now. Any pullback could still be a buying opportunity for a continuation up as this market continues to see bullish seasonality right now. Bullish seasonality from the second week of December into the first week of March. That's your bullish seasonal cycle. Once we hit that seasonal high, we may pull back a bit, and we'll see how that develops from there. All right, let's take a look at gold. Oh, thank you very much. Love from India here, and the mention of my book, Secrets of a Pivot Boss. That's awesome to hear that you enjoy the book. That's just phenomenal to hear. So thank you very much for that feedback. Looking at gold futures here, one thing you see with gold futures is the recent upside breakout here is at risk of failure. This is one thing we talked about before. When we have that big expansive move, that wide data set will tend to lead to a compressed data set in the upcoming period of time. We've seen some of that. So the breakout potential is low, usually, but you will expand the range to the upper end a bit, then you drop a little lower, then you come back. And so this is going to be interesting here to see how this plays out against the 5150 level. If price starts to fall back below 5150, there could be a little bit of a counter rotation to the downside. However, keep in mind, this is not a market typically to fade into the strength right now. This is a market to buy into the dips. So if we do pull back over a 1 day or 2 day basis, that could provide a buying opportunity back up. But watching this one right now as it continues to develop around the midpoint of the larger key range. So anticipate a little bit more back and forth here until proven otherwise. All right, let's take a look at the YM here. The YM right now showing a ton of compression as well. This has been a safe haven away from the AI trade, away from some of the tech selling pressure, including in the software enterprise group and some of the Mag 7 stocks. So this one's been a little bit of a safe haven here. However, it has topped out and is now compressing here in this multi-day range. That's a 6-day compression. Let's bring that up with the ADR indicator here. This is quantified at 48% right now, 48% of average range. And if you look down here, that's in the bottom 7 percentile of the data set over the last year. So this is the bottom 7 percentile of narrow ranges over the last year. So fairly compressed on a 6-day range basis. 1, 2, 3, 4, 5, 6. That gives us this reading right here. The average would be about 1,600 points. That would be the average. The current near-term average on a kind of a falling volatility basis, an ADR drop basis, that would be about 1,300 points. However, whenever you have compression, it tends to lead to expansion, and the expansion tends to be beyond the average. So that means we could be looking at something north of that 1998 level. That's your 125% extension, so that's kind of the high end. I would shoot between 1,600 and 2,000. So let's call it 1,800, something like that. Could be in play up ahead out of this range. We get a breakdown through 49.2. That opens up the potential to drop way down here on a 2,000 point basis to 47.2. That's a huge move. If it were to play out in that way, again, we'll see how much energy is released, but there's tremendous amounts, and it could continue to build out until proven otherwise. That's why you got to avoid the chop right now and look to fade the extremes until proven otherwise. Looking at Bitcoin. Bitcoin here, yes, got Bitcoin up next. Now, this one was a little nerve-wracking to begin the overnight Sunday night trade here. If you look at kind of how this thing started in the overnight trade, it was a hard drop right away. Boom, boom, boom. That's how it started. Right around the Asian Open, though, Asia Open here, you saw the thing pivot and turn right back up. But that's a pretty aggressive drop to begin the week. Is it an opportunity to go outside week up modestly? Perhaps it is. Let's take a look. If you look right here, the previous week's range, this is 1, 2, 3, 4, 5 days. So that's the high and that's the low. If we're rejecting the previous week's low, anticipate a return to the previous week's mid with a shot to push across to the high if we can push through the mid. So what's that level? Well, we can take a look at last week's mid right here, and it's about 67,800. The actual level would be, that level right there, 66,043. That's the level. Oh no, that's the current level. Okay, yeah. So this level right here from the previous week is the one to recover, 67,850 or so. You push through that zone, you open up the potential to come back up, but now you have yourself a 2-day range. So this one is interesting right now. I'm having trouble with really getting behind the strength of this one despite the strong low we've seen here. A highly confirmed pro signal on the PivotBoss Bands Pro indicator released last night to our PivotBoss Masters members. Already great feedback for both TradingView and Thinkorswim. Check it out at pivotbossmasters.com/live. But it's ready, and today begins our 5-day training on the tool. It's going to be a lot of fun. What I would say right now, as we jump back to this Bitcoin chart, this compression right here is very, very energy packed. It has enough energy to push this market 15 to 20,000 points over the next 2 weeks. So if there is any failure at 65K, there is a 15 to 20 point drop coming. So that's what I'm watching here in Bitcoin. I would be very cautious on the upside. It really needs to prove it. It is risk off right now. Ethereum, very much the same way. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day compression. We can do it here by bringing up this tool and just looking at what a 10-day looks like. But both Bitcoin and Ethereum look the same here in that the compression is significant. And if we get even average expansion like what we've seen before, this is a 1,000-point move coming. 1,000 points, say it was to the downside, this 1,000 points here would drop us into the 900 to 1,000 level. That's a 50% haircut from now. What if we fail and just drop half of that into, say, 1,400 to 1,500? That's still a massive drop. So I'd be cautious, again, still in Bitcoin and Ethereum. Tremendous compression developing with the potential for expansion. But this one's going to be one that you really, really have to be careful of here. At some point sooner than later, for those of you in the trading room, you know that we've offered the next potential double opportunity here if we can be patient, but we got to see if we can get that next drop. If you want to check out the trading room, link in the description below. But I am going to go ahead and call it a morning pre-market live stream for today. I want to say thank you very much for joining me here today for today's pre-market live stream. Again, if you liked this format, please give me a big thumbs up, subscribe, and again, hit the bell to be notified because that lets you know as soon as the next live streams are hitting. I'm going to be testing out different time slots for these live streams, so you definitely want to be aware of when we are putting these out. So again, give me your feedback in the description, or in the comments below rather, and check out the links in the description below. As always, it's been my pleasure, and I'll see you in the next one. Take care.